This is a very important video. I want to teach you an important point in this video. Whenever the distance between the current closing price and the yellow line, the first yellow line, whenever that distance is more than 5%, I usually outright reject the stock. Or if the stock has some extraordinary numbers, then I would keep the stock on my watch list, but I would be very careful with that stock. So let me give you an example of what I just said right now. It's a very important video. Please concentrate on what I am saying here. So this is Motilal Oswal. I was looking at this stock on this day. By the way, I did not buy the stock. I was looking at the stock on at the close of this day. Now you see what is the closing price. The closing price is 973.60. And the yellow line, which is our buy point, it is 1025. So let's do a quick analysis of the stock. So you have blue, green, red. The price is above the moving averages. So it's a nice, strong stage two uptrending stock. Then you have 4 points in the base. So point 1, point 2, point 3, point 4. You have 4 points in the base. You have minimum 10 candles in the base. You have the blue, green, red. And the icing on the cake is that you have a mother baby candle and the yellow line is in the green zone. So what else you want? Everything you want to see in a stock, those four things that I discussed: blue, green, red, 10 candles, 4 points, green line in the yellow line in the green zone. That's it. Plus icing on the cake is mother baby candle combination. Okay. All of the conditions that we are looking for are here. However, I still rejected the stock, or I kept it on my watch list, but I was very cautious about the stock. Why? Because the distance between the closing price, so this distance, if you measure from the closing price till the yellow line, it was roughly 5.28%. If you measure exactly here, it says 5.17. But you have to measure from the closing price to the yellow line, not from the yellow line to the closing price, because we are currently at the closing price. We are going from down to up, not from up to down. Okay. So if you measure the distance from closing price to the yellow line, it should be less than 5%. If it is not less than 5%, I am not interested in the stock. Now, why this is important? Well, this is important because imagine the distance between the closing price and the yellow line is 8%, and the stock shoots up 9% the next day. That's a breakout, right? The stock makes 9%, but how much do you make? You make only 1%, right? Because your buy point is the yellow line. That's a problem. So, on a day when a stock shoots up 9%, you end up making only 1%, which is not a great deal. Okay, making a 1% gain against an 8% stop loss is never a good deal. So, the smaller the distance between the yellow line and the current closing price, the better it is. Okay, the better technical setup it is. Okay, so technically the stock looks strong. Only problem why I rejected the stock was the distance between the closing price and the yellow line. Now I told you before in the video that sometimes I may keep such stocks on my watch list. Why? Because they are showing extraordinary strength in some other department. So remember, we do comparative analysis, we do technical analysis, we do fundamental analysis. Technical analysis we have done, it looks very strong. What about fundamentals? Let's have a look at that. So we'll go to MarketSmith and I will write here Motilal Oswal. Okay. A very famous company in India. So if I click here, now I have all the data here. One page, I have all the data. See, inside the base, you have this blue dot, which means 52-week high of the relative strength, which means the stock is extremely strong. Look at the relative strength of the stock, 93. Okay. 93 relative strength. Institutional demand is B, fantastic. I think the group rank is declining. So Earlier it was less than 66, now it is 66 and rising. So only the group rank is a problem. However, institutional demand is there. The price strength is fabulous. It is in the 90s. Even the EPS rating, which I don't look at, it is 97. Have a look at double digit, triple digit growth in profits of the company, the earnings and the sales of the company. So this is explosive earning EPS and sales growth. So fundamentally, the stock is strong. Technically, the stock is strong. Comparatively, the stock is strong. What's the problem then? The problem is that 5% distance, this distance. That is why, since it was strong in all the three departments, I kept the stock on my watch list, but I was very cautious that if the stock touches the yellow line, I have to be very, very careful because the distance is more than 5%. That is the reason why I was very cautious about the stock. Now, look what happened. It never gave me a chance to buy. Okay, see, the market was weak. And this is the current candle. Today, the market is open. It's 10:46. It's still falling. Okay. So now you understand how I look at a stock. My step by step process is as follows. I look at comparative analysis. I do technical analysis. I do fundamental analysis. All these three analyses, it takes me only 10 seconds to do all these three analysis. Okay. Less than 10 seconds. Why less than 10 seconds? Because I know what to look for. Okay. I am looking at hundreds of stocks in a week. If I start spending 1 hour per stock, that is not going to help me in my trading. So I look at a stock, I spend less than 10 seconds on the stock. I get an idea of whether it is comparatively, technically, or fundamentally strong. My brain is trained to look at such things. Okay. So since it is strong in all the three areas, I kept the stock on my watch list and I was cautious. So this is what I wanted to convey in this video. There are many stocks which you will see which have more than 5% distance. So Aditya Birla Real Estate. Let me show you Aditya Birla Real Estate. Have a look at this. See 0.1, 0.2, 0.3, 0.4. Okay, roughly. So if you see yesterday's candle from here till here, it's 7.83%. So outright reject. So always I check the distance between the current closing price and the yellow line, the first yellow line. If it is more than 5%, the stock is out of my watch list, reject. Okay. Very, very important concept which I wanted to convey to you. And before I close the video, don't forget to download the checklist that I have placed in the description of this video, the swing trading checklist, positional trading checklist, and stock categorization checklist. Okay. Thank you so much.